The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here. My pleasure to be here on this Friday, the 9th of August. We've got a Dow that was this time yesterday, was up sharply. It was up about 250 points. Closed well into the 300s yesterday on the upside. Today it's giving it back, down 237 at 26,141. Today we're going to spend a little time looking at the weekly chart. The charts that you're looking at here are not notated with Chapman Waves. Had a problem with the computer, as you remember yesterday. That computer has seen its last days. So I'm using a different system right now. So let's just go through the numbers. The Dow, you see this on the left, the 9-period exponential moving average, this black line right here. The Dow bumped right up against it yesterday. And today tried to get above it and failed, and now it's down sharply. See the way the MACD is here, these two lines, the red line, the green line? Look how big, look at how wide the space is between them. That is a negative. Look at the stochastic, very sharp move between the low of Wednesday and the high of Thursday, and yet the stochastic's only at 32%. To me, that is not good. Remember what I said yesterday? There was a question, I think Jimmy wanted to know. He said, hey, did I just hear that Basil said the Dow's going to be up 100 points today, Friday? And I said, no. If it is up triple digits, that is a powerful move. That's got the V-shaped recovery. But if it does what I think, and that is have a little doji candle, maybe down even, or because at that point we didn't get that extension of about another 100 points to the upside by the end of the day. And what I said to subscribers this morning, and subscribers, I'm sorry, I will get out as much as I can. I'll get out the kind of a full report, and I'll answer the question on the IAA in a minute. We'll talk about that just briefly, but in the meantime, I just wanted to say that I'll do the best I can. Hopefully, if everything works out by Monday, I should be back in business with my desktop, which I can go to from anywhere in the world, which I've done for as long as I've been here at TFNN, actually even longer than that. Using my PC, I get to it from when I was in Australia, when I was in Israel, Spain, wherever it is I've been, London. I use this, and it's always been very good. And so the desktop is really my server in a sense. I can get to it from anywhere. So right now the Dow is down 230. The S&P, so the middle chart is going to be what we talk about today. That's the weekly. On the right is the monthly. We don't have to talk about that. What I really want to talk about is the middle chart, the weekly. Let's finish off here. We're going to go to the S&P. I have to thank Tommy Jr. for all the help this morning. And also, hey, that was a great summary that you gave for the noon lunch hour update at TFNN. So, and also want to thank Al for getting everything organized and helping me this morning. 2906 down 31. Remember, the S&P was up 51 yesterday, so now it's down 31. What's really a concern is this weekly chart. Look at that. It went above the 9-period moving average, the black line of the daily, just briefly pulls back. This morning, this week, it's gone right to the 9-period exponential moving. This big, I especially made it big and thick on this particular platform I haven't used for a couple of years now. So I'm looking at it and I'm saying, I remember I made it nice and thick in all the different time frames so people could understand how I use moving averages and just why I use the exponential moving average. Everybody has their own thing. A lot of people like simple, this is what I use. And you can see why. Look how nicely it broke under it. And this week, bam, it hits it exactly at 29.42. That was the high. And comes all the way back down. Did it get to, I think it went just under it. It went to 29.38. So just missed it by a hair in the weekly chart. So that's down 32 points. But wait a minute, the QQQ, which seemed to be leading and doing everything right yesterday, is down 271 at 185.55. It too is that daily at 2 QQ. It has the 9-period exponential moving average of 187 is very strong resistance and is pulling back. And look at this, the weekly chart went right to the 9 EMA and pulling back. That means to me that these weekly charts, especially at the end of the day, we don't know what the end of the day will do. We know that every hour of the day can have a volatility like we haven't seen on a narrower basis than usual. You remember back in December of 2008, we saw 1,000-point moves just like that. So this is a little different. 500 points, maybe sometimes cumulatively 1,000, but nothing like it was before. And that was always going to lower lows. And this is kind of stuck in a nice trading range. I'm going to give you supports and everything in a moment, but look at the IWM. The IWM, which is the Russell 2000, I just need to keep checking here to see if my engineer is going to give me if I'm doing everything correctly. Yep, IWM is down 1.93 at 150.61. Again, look at the daily 9 EMA. It didn't even get close to the 153.64 level of the weekly. And now let's go to gold. Gold should be rallying right now. It is up 5 at 15.14. It hasn't taken out the high of 3 days ago, which was 1522.7 on the 7th. You remember I had drawn in a rectangle and I said, I think we're going to be stuck with a kind of a flag formation at the top, like a flagpole, and a rectangle flag flying up there. And we might make a nominal new high, and then I think we could start to consolidate. That's my thinking as of now. But look at this weekly chart. What a spectacular move. Look at the monthly chart. I'm impressed, you can tell. Silver is trading right now, so gold is up. Where did I say 5? Silver is up 0.03 at 16.97. It's kind of stuck after that big move. It was dragged up, and now it's kind of a high-level consolidation between 1667 and 1735-ish, I think, over the next couple of days. Weekly chart has really improved a lot. Gold and silver are in play. Gold is in play because of the confluence of events that are right around the world, geopolitical, economic. There's a problem going on right now. Now I'm going to go to the dollar, and the dollar was holding pretty well considering, but it's weak today. It's down 22 pips at 97.42. It's under that 9-period moving average. Is very strong resistance now. You made a significant peak in the monthly chart. That is a leg D. And that leg D is bumping into trend line resistance. You remember I drew in a longer term trend line that goes right to, I'll do it now, right here. And you can see that because of it, there's a good chance that resistance can last a little longer. And you bet that the administration is wanting a lower dollar. We'll see if they're going to get it. Next thing I want you to do here is crude oil, and then we're done, and then I can go to those weekly charts. And a couple of questions about CL. A couple of questions about parameters to watch in some of the key indices. So you've got crude oil up at $1.88 at 54.44, up above the 9-period moving average. Remember, I drew in the rectangle here. I said above 55.80 sort of breaks out of a rectangle formation, and the low on the 49s has to be key support. I said I think it's stuck in the range. I wouldn't be surprised if there's a bit of a bounce. It can go to the 9-period moving average of the weekly to 56.50s. How much higher than that is going to be an issue? All right, we've got a break coming up. I have to talk about the TLT, which is up sharp. It was up sharp. Now it's up again. It's up 51 cents, but under the low under the high of Wednesday, the 143 is where you had a monthly retest of a high. I'll be back. We'll talk about that, and then we're going to go to those weekly charts. So important. I'll be right back. Basil Chapman. Thank you.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So let me just answer this question. Greg wants you to know, one of my subscribers, actually a couple of people asked the question. Some people who have been subscribers for a long time know that if there's any mistake in my newsletter, you revert back to the ranges of the day before, only the ranges. You don't have a new buy signal or anything like that. The buy signals are for that day. Those are the parameters we're looking for. So in that particular instance, your entry price, at least for now, let's treat it as the entry price. Stick with the parameters that I gave yesterday. I don't want, it would be unfair for me to say, Greg, this is the stop, and then everybody else who doesn't hear the program has a different stop. I cannot do that. You have to stick with the parameters from yesterday. So far, everything's safe. We're still very, very, very nicely up on that. So yeah, just that's what I'm going to do. So the TLT, now, if I pull back this chart right here, look at that, you'll see that the Lehman iShares Treasury Bond ETF goes back to a high. 138.50 was the high back in January. I think it was January of 2015. Look at these beautiful cup formations. Remember, I love to look at markets as cups or arches, and there's a second like a handle, and it went to 143. I think it was something 60, 143.62. That was July of the week of July. It's a monthly chart. That was July of 2016. Well, yesterday, 2 days ago, I think it's 3 days ago, we were on 143.06. I mean, that's amazing how it knows after so long, 3 years, and then it comes, bam, comes right back to that level and stalls there. But it might just be a stall. Everything about it, the technicals are still good. And that says to me, the Fed might not have any choice. They might actually want to, deep down, they might want to even raise rates. They can't do anything. They are stuck. Why are they stuck? They're stuck because there's an international wave of selling yield, and you can't stop that. It takes a climax. It takes some kind of a crisis to change that. I was talking to someone yesterday at a very nice meeting with someone I haven't seen in quite a while. We meet every year, a couple of times a year. I hadn't seen one enough for a little while. And this person is He's gone to the Harvard Business School. I mean, did everything right years ago. He knows, I mean, you name anybody. Oh, yeah, that's right. Yeah, I remember him, and when he did this and he did that, and he was involved in everything. Very modest guy, just very modest in the biotech area. And we were having a long discussion, as we always do. And you remember saying, I cannot believe way back, you were one of the only people who said that you thought that Obama would become president, etc. So we really go back a long way. And I respect what he says. So I wanted to get his understanding on yields and stuff that he's involved in. I look at it, I talk about it, in our family affairs and all that. Yeah, some part of it is involved, but he is deep in the weeds. He understands, yields. He understands the input being received by people that are even more knowledgeable than him, that he's in touch with. And he was just shaking his head, and he said, in history, I don't ever recall reading or hearing about interest rates that were negative, that you lost money by having somebody that you had to pay to give you back less money. I said, you mean like a bank that keeps your safe deposit box and then charges you for it? Yeah, I mean, that's kind of the way you got to look at it. So there are implications, and Paul keeps emailing saying, it's the bonds. You don't understand bonds. You don't know what's going to coming down the line. All I can say is, in the big context, you're absolutely right, Paul. I'm a novice in this game, although I can tell you that I have a lot of experience. And and looking at the charts and studying the charts, but in real life, we've had inflation back in the 1970s, which is we had to go to the post office to see if the stamp that you bought yesterday was still valid for the next day. Okay, that's inflation. We have not hit Zimbabweism. I suspect that when this finally unfolds in the end, that yields will make the 1983 yields. And this person was saying to me, I remember I was paying 18% mortgage. Kids today have no clue that that even existed. When that looks like nothing, because it goes even higher. And that's going to happen at some point. When that spigot of inflation is opened, it's not a pretty sight. Okay, enough with that. So this person also in the field of IBB, this is the field of biotech. I said, this is such a diverse, such a bifurcated period. Politically, economically, bonds, I mean, everything you look at, even the biotechs, there's some biotechs that are just doing great, and there's some that just can't get out of their own way. And he said, yeah, that's exactly what I'm seeing in my field. Yeah, and we have products that are longer term, that are so exciting, but they're not ready. They haven't even passed initial tests yet, but they are so exciting. And then there are others that are doing great. So this is the period that we're in. So even looking at the IBB, stuck in a range, 104.30 down $1.58, all-time high in the 123s, goes down to 89, bounces up to 116, down to 100, making a V-shaped formation in the monthly chart. This is that triangle formation. If it takes out 99 one more time, that's pretty negative. Monthly, okay. This is what I want to look at. In the weekly charts, let's go to the Dow, IND. Here we go. The Dow itself, I've called this a peak E. There's no other way to count it from the low that was made back in December. There's the low, and you go peak A, peak B, peak C. Remember, peak C start to slide sharply. We were very lucky. We got the June 3rd low and then ran to the top. We were also very lucky. At that point, we got the exact 7 points from the all-time high on the short side. We've covered some of that. We've still got a nice position on the short side. I'm thinking here that we've got to watch closely to see how the 25,800 level to 25,700, that's the first big support that I'm looking at here. If that's taken out, that is not a good sign because you've broken the 200 period moving average in the daily. You're making an arch formation to come back down. Okay, that's one thing. The weekly chart says, hey, We've seen this before. You can draw a trend line, but we've taken out that trend line, but it's a couple of hours to go for the end of the week. So let's see where this closes. We've just nicked it on the downside. Here it is. Just continue it up. And we've nicked it, but we're way above it right now. We're at 26,135 in the Dow. The low that was made at 25,440 3 days ago. We're nicely above that. In the daily chart, you're nicely above that. But the MACD is about to close negative for the first time since that June 3rd big push to the upside. This is the M formation. I call it the double camel hump. It's just a technical term that I invented because it's got this M-shaped pattern. And we've seen previously in different times that weekly chart can have two peaks. And that peak, second peak, if that gets taken out sharply to the downside and the stochastic goes from over 8% to 100% very quickly, you can have a deeper decline. And now I'll talk about why there should be support. Short-term level. I'll be back in about questions out now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I wrote back, just as I was saying to myself, gee, this headset is it's working so nicely. I can hear so clearly. Something went wrong. All right, well, that's the way it is. Let me go through this again. The Dow weekly chart has pulled back sharply. The MACD has the green line, the 9-period differential, just under the slow red line, the 26-period moving average. It's how strongly the green line goes undercuts that red line next week if there's a very weak week. And the stochastic going from 82% now, if it goes under 80% as all that, and this trend line supported 25,900 is taken out at any point intraday, intra-week, any day, that's going to be a big negative. So this says to me that these weekly charts, I don't think we're in for a V-shaped recovery. Just like even though there's options exploration next week, I think it's going to be a bit of a struggle between the bulls and the bears. And until the Dow closes above 26,400, it's probably 26,580, the 9-period moving average in the weekly chart. I think we're kind of stuck in a range for now. I don't think we actually have to break down and really smash below 25,400, 25,200. I think we can do a lot of testing. Many stocks I looked at were very, how can I put it? They had very strong 6 to 8% declines in a very short period of time, and now they're just trying to find some footing. But look at the S&P, and this is what I want you to talk about today, so I'm going to do it right now before I have another goblin or gremlin or whatever they're called. Look at the move down in the S&P. It makes an all-time high, 3,027.98 on the 26th. Then in one move, we call a single leg A to the downside, and then a trough A. It stops at the 200-period moving average, having gone just below it, and it goes from the 20. It goes to 20. What's the low? Let me see if I can find 28.22. Hey, that's a pretty big move in one swoop. It goes from 3,027, 100 points, 105 points. That is big, and this particular pattern says that you could, in fact, have a bounce and then come back. You could even retest by going slightly lower to maybe the 28.17, 28.16 if there's another bout of selling. But it's also saying that this long, skinny candle that we've made in the weekly chart, even whatever, doesn't matter now where the S&P closes, I always grab the outer level and I say, look, we've got a rectangle formation. You could form another H with a successful H and then a sudden move up that takes you into, later in the year. You just start going to 3,050s. But it depends on how we survive this coming week. So that says to me, it was really important what happened today. And because of that, because we haven't got even just a slight up move, we just got a lousy candle, no new high from yesterday, going towards the low of Thursday, that gap up low, doesn't have to close down. I'm just saying this candle negates a lot of the strength from yesterday. Much of it was short covering. Okay, I got that out of the way. I want you to talk about this candle. This candle right here, the long-wicked doji candle, I call it a long-legged doji. Usually dojis look like a plus sign. This is a very long-legged doji. Almost opens and closes at the same price for the week. Very unusual on a weekly chart, and very unusual after an all-time high within 2 weeks to do this kind of pattern so sharply low. You saw a little bit like it, but not even close. Open and close, well, we haven't closed yet. But you can see what happened right here in candle of the 17th of May, and then you went down for 3 more weeks before making that June 3rd low. Fabulous move up. So patterns very often repeat, but they can magnify or they could minimize. And we just don't know yet what will happen. So let me go through. I've got a whole bunch of questions I can see on the emails that have come in. I'm sorry, I cannot see the den right now. I just don't want to mess anything up. I thought I was doing fine until that. Until my headset suddenly stopped. So let me do this. We're looking at the S&P weekly chart. Look at the monthly. The monthly is on. Let me just open this up so I can see the exact numbers. On, it's -2. In other words, it tried to cross positive. It looked great yesterday. If it had another 100-point move today, that MACD would have crossed positive. That would have been a different ball game. is deflecting lower, but there's still 3 weeks to go to August, so we can't even talk about it as if it's closed. I can just say right now, the MACD was, the rally was aborted to the upside, and so far it's gone back to negative, but the stochastic's at 87%. You see, I don't like to fight all these different trends. I like an 87% stochastic. I also prefer if the MACD was positive, because that would say to me, wow, now you can buy every single dip. I don't think that's the case. You have to be very selective right now. So the AAII, I got a number of reports saying that the amateur, I've even spoken to the group a number of times, AAII Institute, amateur something, that has a very high level of people being very nervous, very nervous. That's a bullish side. I think I hear a break coming up. Do I hear a break coming up? Uh-oh, yes, I do. I'll be back in a few minutes. Dow's down 252, S&P's down 35.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the fund is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So what I wanted to also tell you was, in the monthly chart of the S&P at 87%, that should be a buoying between the 2857 9-period moving average and the 87%. It would take, I suspect, a move down to the 29, probably to the 2830s to get that. No, it might be less. It might be just a retest of the 2800 area. Yeah, maybe 2830 to 2800 area. That would turn the stochastic pretty negative. So there's some kind of a buoying aspect to it. Okay, look at the QQQ, 1, 2, 3, 1, 2, 3, here we go. The QQQ, this is right at that 9-period moving average. The MACD is just about to turn negative. The stochastic is at 85 also. So all the weekly charts are really showing some very nice internal strength. So as I did this before I lost my computer and I went on to the other, I got TradeStation through through another laptop. As I'm going through these without any notation, I'm saying make it as visual as possible, and you can see that we've had a move in the Qs of this amount. Look at the weekly chart. I'm just going to draw a straight line in. There's a technique that I call the Chapman Wave parallel one-to-one extension. So now what I do is I grab that. I want the exact angle. I want the exact price. I move it over to the next peak, and that peak says, aha, right there, you've got a move that could go into next week and even the following week. 175, 10 points lower, would be a parallel with the previous peaks to the low that was made in June, and that would take you to about the 175-ish area. And maybe it actually could be a little bit better. It could be 174, could even be 173. So to me, that's the downside risk. But I think it's more time right now that we're looking at. I'm sorry I can't take calls, but let me just run through a bunch of questions here. EWG. EWG is the German ETF. It is trading right now down 20 cents. And look at this weekly, look at the monthly chart. Look at this lowercase h. Remember, I like to look at H's and Y's. This is an H pattern going down. So far, that's not very good. Look at the IYT. IYT is, these are questions that have come in. I'm not going to name, I just want to quickly go through them. There's this pattern that gives you the lowercase h in the weekly chart. It's down 251 right now at 183. It's given back quite a chunk, but yet it's still above yesterday's low. So this is a basing formation. I suspect that over the coming week, we'll have these sudden moves to the downside that'll maybe start to make slightly lower lows. I don't know if they will test the most recent low of one in the IYT that transports down at the 179.21 level of August the 5th. But that looks to me like it's a pattern that's going to struggle. At the same time, on the upside, you've got the 9 and the 14-period moving average of 185s to 187s as strong resistance. So until there's a catalyst to really move the transports, the Dow, the S&P, the Qs, the IWM, really sharply higher with a sustained move, it's going to be very tough. Question about the EWI. EWI is... I think that's Italy. Let me just double check. It should be, yeah, it's the same thing. Look at the monthly chart. There's that H pattern. It's holding a little bit better than the German, but look at the monthly, the weekly, M-shaped pattern. It looks like it really wants to take out the low of the week of the 31st of May at 25.80, trading now at 26, down 32. Not a good sign, but look at the tiny little doji in the daily, but it's a flat stochastic at 10%. I don't like flat stochastics. They tend to stay flat for a while. Question I had about the treasuries. All right, so let's do this. A dollar TXTXN.X, dollar TNX. .X, those are Texas Instruments, trading at 17.02, 1.702, and trying to come off the bottom, but still really struggling. And yesterday we spoke about the TBT trying to have a bit of a rally. Let's see where that is. TBT had a bit of a rally yesterday. It hasn't. It's pulled back some. That's the inversion. That's the reverse of the TBT, the Lehman 20-year T-bond fund. This is the inverse of that, and it's trading down 21 cents. It's like that 10-year. It's at 25.50. So until the TBT is able to push above 2670, the 9-period moving average in the daily, and then sharply into the 2730s. It's just kind of stuck here, but I got a feeling that it's not going to go that much lower just in the very short term. There's a little bit more of an upside bias. And the question yesterday, I think it was Kathleen wanted to know about the TLT, and I think that I wanted to draw in a rectangle saying the 143s, maybe even the low 144 area to the 137, 136 support. That's kind of the rectangle that I'm looking at for now. All right, GDX, what a spectacular move in GDX. Hasn't taken out the high of 3 days ago. Look at this weekly chart. Peak A, peak B, peak C, and we're in leg D. MACD, the moving average weekly is strong. The stochastic at 92% and flat is outstanding. That says that gold, the GDX, the gold miners, this has tremendous support between the 26s and the 30.80, maybe let's call it 31 level. It could be stuck there for a little while because it's acting so well. So as I'm looking at things, I think we're getting a better sense of resistance and support levels. YRCW, a question just came in. YRCW, is that, oh man, this is, what is it called again? YRCW, I think this is in the, isn't YRCW in the transportation area at 2.77? Oh my goodness, this looks like DBC. DBC is Deutsche Bank. Oh, DBC, not DBC. DBC is the oil, mostly oil, not agricultural, but oil fund. DB. Oh, yeah, it does. It looks a lot like DB, which is Deutsche Bank trading at $7.50, but it was once in the 650s. You know, these charts that keep making lower lows, you've got to be really careful about them. So another question came in about, where was it here? Amazon. What is it? What's the question? Or is it a statement? Amazon. Amazon's down today. It's down 20. How much is it down? I can't even see. 26 at 1806. Yeah, there's this pattern made a higher high, and at 1807. All right, let's just do this. The MACD is negative in the weekly chart. The stochastic's negative. I suspect that Amazon could at some point touch the 1672 low of the week of the 7th of June if the 200-period moving average of 1801, let's just say if it closes at under 1800 at any point in the next week, I think a test of that low of 1750 is in the cards, and that's going to be key, because if it takes that out, it could pull back. But it is starting to improve just a little bit. You see the MACD is flattening out, stochastic's flattening out, and look how 3 times it held the 200-period moving average.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that have transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up next. Comes David White, and then Tom O'Brien. And let me just wish you all a happy weekend, wonderful weekend. See you on Monday, hopefully, with all these problems resolved. Okay, so the question came in, why don't you just back up the truck? Trump needs a great stock market in 2020, low rates. Basil Chapman Wave charts show higher future markets, just at a 7% pullback. Why not back up the truck? So, it's a question that I've been asking myself for a little while now, and there are a couple of reasons why I think that just at this particular moment you can start, and this is what we've been doing for subscribers. We've entered some positions that I think have really great potential, but the backing up the truck means that there is no more than maybe another 3% pullback, maybe 4%. And I don't think that's the case. And, of course, we are subject to news. Look, right now the Dow suddenly is only down 100 points. But this whippiness right now, this shakeout. Remember I spoke yesterday about the dog comes out of the water and it shakes itself, and everybody gets wet. Dog doesn't know that. Dog just sort of wipes its feet and then casually walks on as if nothing happened. That could be what we're looking at right now. I like what I see, and I think I prefer right now to be very specific and say these are the areas we want to get in, and they will succeed if this market really starts to move to the upside. But I think we're in for just a little more choppiness maybe coming up this week, especially with options expiration. Everyone's expecting a big move up, so maybe we've got these sudden moves to the downside. But preparation is the name of the game, and I think right now preparing for a bigger move is really the issue. I don't think that we're out of the woods, but I do think a chunk of the negativity has just been thrown at the market, and that should be very good support. So if I'm looking at support, yes, I think that whole area in the Dow, 25,800, 700, that really, I wouldn't say worst case basis because you never know, but that should be very strong testing area and a cushion. So we'll see what happens. So I think we're about to wrap up the show. I'm not sure. I don't hear the music, but I don't want to keep talking over the commercial because I'm having a little difficulty in this regard. So have a wonderful weekend. Thanks for being here. Check out my opening call. You can see it on the front page of TFNN. You can take the trial subscription. Great time to get it. Have a wonderful weekend. Stay tuned for Steve.